Boom. We're live. What's up, boys?
What's up, buddy?
How are you guys doing?
Doing pretty good. The stock's up.
The stock is up 27% year to date.
It's making me terrified, dude. It has to go down. Like,
have you?
Boo! Does not have to go down.
I've been trains for the past year, man. Like, it doesn't feel real. You know?
Wait, what did you say? It's making you terrified?
It's scary, or it's not terrifying, but
why?
It's scary that it's going up because I know it's bound to go down, right? Because the past year.
Whatever goes up must come down.
Dude, there used to be a time when I started investing when like stocks would go up and I'd be like really excited, and then stocks would go down and I get really depressed. And now I'm like the complete opposite. Like stocks go up and I get depressed because I can't buy more, and stocks go down and I get like really excited. It's just
good point.
It's weird.
I would like to stock up back at $4, but hopefully, I don't know. Do y'all think this might be the bottom of like the last time we see Sofi at $4? It could possibly well be. No,
no idea, my friend.
You have a long year ahead, so who knows?
Yeah.
Did you guys?
Tanner's smart not to speculate about this stuff.
Smart enough to speculate?
Not to speculate about this
Yeah,
stuff.
I don't do that.
Yeah, I bought a bunch. I mean,
what price? 550, 540-ish?
530. 530 something, 532, 533 on Jan 13th. So I guess a week ago today.
Okay. Yeah,
I'm waiting till earnings, honestly, now. It's getting too close. I don't like to buy before earnings.
Yeah. I mean, what about you? You're notoriously like your average is probably better than most people watching this.
I think I bought like 200 shares this week. I think at 540. I was at the chiropractor. I was waiting to get chiropracted, and I was like, oh, let me just buy some shares. Because my average, unlike Palantir, is so beautiful that I don't have to worry about buying at $5, $6, even $7. It's just so beautiful, you know?
Yeah.
But yeah, if it goes down back down to 4, that would be nice. You know, it was stuck in that 4 channel for a while. But it's not just SoFi. A lot of stocks have kind of broken out of their channels that they were in. If you look at Netflix, Tesla. So this might just be a little bit of a bear market rally, as they say. But we'll see on earnings. All right. We got a lot of news, a lot of stuff to talk about. The title of this video is SoFi had some articles written about them this week. Some were good, some were bad. So I guess we can let's start off with the bad. Do we want to start off with that?
Tanner, aren't you keeping track of all that? The bad.
Yeah,
I
was watching bad articles written this week. What bad articles were written this week?
I don't know. We had some.
I think he's talking about the IP banking research, but that's not bad, man. That was
weeks
apply.
Ago. So
the new one, the DFS comparison.
The comparison to Discovery, yeah.
I thought it was a good article. You know what? Everyone was tearing him apart. I thought he brought up good points, and I just think, you know what? I summed this up in my video. I just think we're valuing it 2 different ways. I don't remember the username of the person that said this, but what they're saying is, if you value this stock as a bank, or sorry, if you're looking at this fintech and you're valuing it as a bank, and you're looking at certain metrics that you're going to be looking at the fin part of the fintech. But if you like the tech part of the fintech part, then you're going to be valuing it off of, future cash flows, these sorts of things. Then, it's just valuing the company completely different depending on how you look at it. And I think of this stock way more than a bank. And some people want to reduce it down to that, but I think that's how you get caught up. And it's very much like the Tesla situation, right? It's more than a car company. I think SoFi is more than a bank, but that's, we've said this so many times. So, no real new articles this week for the most part. I was covering mainly old news in my last video, which, by the way, seemed to have a ton of great traction. So I appreciate if anyone's watching this that saw the video or left some very nice comments. I appreciate it because that was awesome.
Yeah, one of your last videos was really, really good. I said that in a weird way. I mean,
one of the last 3 was good.
One thing that I was wrong about last week was I thought there would be new Galileo partnership news or Technisys news. Like last quarter, SoFi started releasing a lot more partners, or they're being more upfront about it, but it's dead silent from SoFi. The only cool news that I saw about Galileo is they're starting to advertise on Twitter, where I'm mostly at, next gen banking core advertisements. which is something that they haven't done previously. Like back in December and November, it was usually just like payment processing, and now they're starting to shift closer into next gen banking stuff, which is really cool. So hopefully, like SoFi, starting in 2023, get some cool partnerships for the next gen banking.
It definitely shows you that the the integration of Technisys and Galileo has really made some progress. Now that they're actually able to advertise on it, to actually spread the product that they have, I think that means that they're ramping up their sales force and they have a product to go to market with. And I'm so excited. So, yeah.
Okay. Go ahead, Riley.
Sorry. Yeah. I actually just want to say, like, I think it was a couple days ago, I messaged the product lead of Technisys Banking Core, and he messaged me back, and it was pretty interesting. He said that they're focusing on having more partners in fintechs, traditional banks, of course, SoFi, and then also greenfield partners. Something very generic, of course. It's not like a big source of information, but yeah, he just like I was focusing on the SoFi part of like their relationship by saying like I really am looking forward to like what you guys are building, but he responded by saying like yeah that but also we're also focusing on a ton of other places, and but he did mention greenfield partners, which is a term for like startups, like a lot of fintech startups, and I think that'd be really cool to see what Technisys is like future partners that are like really like low valuations, and see if we're gonna try to like get a bunch of partners that are just growing, because right now there's not a lot of investing going on. But whenever the market comes back, it'd be kind of cool to see like if we can diversify our partners and get new fintech partners.
I also saw a new video on YouTube that Galileo released a couple of days ago on buy now, pay later and how that integrates from the tech side, which I found was interesting. I didn't have a chance to watch it fully, but them expanding a little bit more about that too on the integration aspect. I like the fact that they're actually dropping videos consistently on YouTube now, just because, whether it's an interview or whatnot, we can just get more details in that format. I think you saw it too, Riley. That I think you posted about it as well.
I posted, but I didn't watch it. Yeah, there's just so much going on, and I wasn't able to sit down and watch it yet. But hopefully, if it's good enough, we'll pull some of that footage on for next week.
So, did you guys see? I tweeted earlier about the partnership between Galileo and Visa.
Yeah, the certification ready.
Yeah, the Visa ready certification, and now the part that I really wanted to bring up is this sort of switch in how they're talking about their company right now. So actually, can I share my screen? Because I got
it. Okay.
I got something else up that I wanted to show.
Yep.
So pretty much whenever you look at Galileo, they are the issuer processor for for Visa. That's sort of the Visa ready certificate that they're able to get, which is sort of this part right here. But now in Galileo's messaging, now they're starting to talk about the program manager, which is not necessarily what our partnership is with Visa, but it could be what we try to get now that we have Technisys. So what this means is that before, just being Galileo, whenever we became a Visa ready, have that certificate to be able to or show off Visa as being, APIs that we're able to, deliver, and that we have their security and their certificates and everything along these lines, and we'll be in their marketing now. That's great, but we're only one piece of the puzzle in being an issuer processor. Having the program manager through Technisys, I'm mixing up the two pronunciations, but through Technisys will be amazing. And then also, now that SoFi is a bank, we can also be the issuing bank of these actual card programs as well. So now we're actually starting to have this crazy, synergy right now. And then the network would obviously be Visa. And so this is sort of the great thing about SoFi right now, Technisys, Galileo, and how we're seeing AWS actually get built out, is that we're going to market not like the rest of these, other fintechs that might have one or the other, but actually combining three of them and really owning, the wholesale network here and then also partnering with MasterCard or Visa, which we obviously have very strong relationships with. So,
So
yeah.
on that chart, Tanner, is program management what they're referring to the intersection of those four things, or is program management a net new thing in addition to those four?
It's not a net new thing. No, it's so there's a lot of different program managers. To the extent at which I actually know what they do, I'm not sure. Right. From the point that I see it is that Technisys is a program manager because they're hosting the cores and they'll actually be able to do the ledgers, the cores, and everything, and actually manage it all. But it is not a new system. It's just one that we're new to because we have a new acquisition.
Got it.
Now, what exact role or payment that they make, those specifics, I don't know. But yeah.
Okay. So, I mean, what is the long-term bull case you see with this partnership? Is it just another core?
There will be a lot of companies, for example, that might have partners for different cores within their business. And then, another partnership for their actual payments, another partnership for their issuing bank. And I think SoFi will be able to offer all of those in combination with Technisys, Galileo, and SoFi Bank. And because they're able to offer multiple of these products, that they're able to offer it at a lower cost. They will bundle those products and be cheaper than all of these single individual companies that might have, different fee-based options, different billing times, everything like this that just gets complicated. Right?
Mm-hmm.
Having your relationship with one company with the strongest network relationships that you can possibly get is a really, really good upside. And a really cool part about Galileo that I find that not a lot of people seem to be addressing is the relationship to Latin America.
Yeah.
A lot of these processors, program managers, issuing banks have no relationship to Latin America. So it makes expansion really hard for these fintechs.
And Technisys is also Latin American entirely, aren't they?
Yeah, that's the awesome part is like Technisys, when we acquired them, they were like 99% LATAM, and they're expanding to North America. Whereas Galileo, when we acquired them, they were 99% like the US strictly, and they were trying to expand to LATAM. So they're both like they have these synergies, like Tanner has said. But what I find really well, actually, go ahead and take it away because I forgot. I lost my train of thought.
Well, all I'll say, I think saying 99% for Galileo or even Technisys is a little strong. However, they were definitely majority in those countries, but Galileo definitely had relationships in Latin America, in multiple countries.
I'm pretty sure that's why they got Derek White as their new CEO, because while the former CEO was a good technical operator, Derek White is if you look at his rap sheet, he worked at Google's head of cloud processing transactions or whatever. But he's lived in Europe and Saudi Arabia, and he's gone and spoke at conferences in Japan and all over the US or all over the world when it comes to cloud fintech stuff. So I think the whole reason they got Derek White is for global expansion. But I don't know. We don't really see that just yet. Hopefully 2023 is a lot better signs than 2022 when it comes to Galileo's expansion.
So do you guys have any predictions for new partnerships? I'm not asking you to name a name, but do you think that Galileo is going to perform well in Q4, or what do you think?
I mean, that begs this question as well from Cassidy Shun from the chat. I have a feeling the reason Noto bought 7.2 million is because they're going to announce they're profitable this quarter. What do you guys think? I don't know if Galileo makes them profitable this quarter. That's for sure. I don't know
about all that, but I think it's kind of early as well. But with just going a call back to our episode a couple weeks ago with the SBC rolling off and presumably mid 2023, I would say by Q2, Q3, definitely Q4 2023, in my opinion. I know that's a more bullish take. We could see profitable quarters rolling in, but I don't think it's going to start this early. Personally,
yeah, no. I think they would have to have such an amazing beat, and we might even see a beat, but especially with the idea of student loans coming off, I don't see that happening. I mean, they were expecting a phenomenal quarter with one of their biggest business lines coming back, and that didn't even come close to profitability. Taking that away, I'm more worried about, are we even going to meet expectations, let alone dominate them, considering we're missing a category of our business.
What expectations though? Like analyst expectations, or like, because there's some critical success factors that I think SoFi is going to meet easily, like growing their members.
Well, the SoFi has put out their own expectations. They're expecting 9-cent earnings per share for this quarter. So
negative 9 cent, right?
Yeah, negative 9 cents. Sorry. That's going to be a big way to go, and that's not going to happen. And then also, I think Noto is not getting anywhere near buying shares near a catalyst. He's not buying because of any reason. He's buying whenever there's no news. I think that's really when they want to buy. Keep him out of the eyes of the SEC.
What was the EPS last quarter, real quick?
Sorry?
What was the EPS last quarter?
12 cents, I think.
Negative 12 cents, right?
Yeah, negative 12 cents. Yeah.
Got it. Okay, let's answer this question in the chat. What do you guys think SoFi will do for their checkings and savings APY when the Fed drops interest rates? Thanks you, Helios, for the $5 super stat.
Probably
they'll drop their rates.
They will drop their APY when the Fed drops interest rates, you're saying?
Yeah.
Why?
Unaffordability.
Well, I mean, like,
people offering cheaper personal loans, and then so we'll need to stay competitive with personal loans. We'll have to lower personal loans, and then obviously that's going to cut our margins. So then we're going to have to lower, checking and savings rates.
You think we'll be like the last ones to drop?
Sorry.
You think we'll be like one of the last ones to drop the APY, since we were one of the first ones to like increase our APY?
We have the pricing power to do so. I believe that. I know that there's a long way to go for them to raise their rates, and so maybe, but who knows?
I really think we're going to get a ton of new members in Q4 because of our high APY.
Riley, you think it's 500K, right? You think that's what's coming?
Yeah, I've made too many predictions. I'm gonna either look really dumb or look really smart. But yeah, no, it's not unreasonable of a prediction. And what was it? The last conference that Noto spoke at, he has like this frame of like on the road to 20 million members. He said that a couple of times, and we're about to hit 5 million members. And
well, they're definitely going to be over 5 million this
quarter.
Like, it's a no-brainer.
Yeah.
That's probably happened months ago.
Yeah. 100%. I'm excited though. Like, I really, really want to see these member growth start like compounding, because there's more people to do referrals and there's more eyes on SoFi Stadium than ever. And I don't know, their advertisements look really fun and exciting, way better than what it was back in like 2019. They've been getting better and better. So
I'm really interested also to see the uptake in the initial options numbers, if that's also going to be provided at all. It's probably negligible because they also introduced it like towards the very end of the quarter, but I'm curious.
But here's the thing too, is that it's not that there's more members, more referrals, and so more eyes should mean more downloads. I mean, that makes sense. But the problem is that on our financial services, our sales and marketing budget is going down. So we're actually trying to save costs that way. And so, yes, we are growing more organically, and that should be lowering CAC costs. But then it doesn't necessarily mean that we're like not everything is equal here. Although we might have more eyes, our budget for promotional growth, right, to actually on advertising spend is going down. So it still could just be in the 400 area, and that's by design.
Do you think it's being reallocated to something else? Maybe they're not spending much on marketing, but more on like referrals because they're getting more referrals now. Or
no, I just don't think it's. I don't think it's focused on member growth. I think they're probably just reallocating that money to be more profitable, to put money towards their capital ratios. Every bank across the board is increasing their capital ratios.
Well, it's also approaching a tough macro environment, right? Like if you're expecting lower revenue, let's say, coming up, just on a macro, not like outside of SoFi, any business, a lot of these rifts that are happening, like reduction in force, layoffs, they're happening preemptively. Like Microsoft has tons of money. All of these FANG stocks have tons of money, but they're just happening preemptively. And like, what are you going to do before you cut staff? You're going to cut budgets for expenditures. And so it's just a preventative measure with the macro environment being where it is. And I mean, aside from that, coming back to SoFi, we know that they've always been super careful about the members, like their member growth numbers, because they want to maintain the quality of actual members from FICO score perspective. So they're also that's a very tight like pendulum where they don't want to go all out on marketing and get lower quality members and growth at all costs. They want to do it very sustainably.
And that's a really good thing, because Netflix spent $2.5 billion in Q4 to get 8.9 million members. So they spent $284 per member. Assuming the best case scenario that those members, all of them, live in a part of the world where Netflix is charging $15 per month, they wouldn't break even until each of those members pays for at least 2.5 years of Netflix. And that's not the case, right? A lot of that was in India. There was
That's wild.
$4 a month, right? A lot of that is ad supported, so it's not even near 15. So, I mean, spending on that $284 per member means the lifetime value of that has to be more than 284 for this to be profitable eventually. And so SoFi really gearing towards not just getting people to sign up just to say they signed up, but actually allowing people to upsell or cross-sell into better products. It's good for the long term. Definitely.
Yeah. So it also depends on, what type of company you're looking at. Because if you try to compare a Square or a Nubank or some of these ones that I've been looking into recently, their CAC costs are like $6 or $10 between this area, but then their lifetime value on their clients are so like unbelievably small. And really the lifetime value for clients and the best way to look at this is if you actually look back on the first investor presentation for SoFi, back whenever we actually SPAC'd onto the market, where they were talking about making like $14,000 per customer. And like, it's incredible. Whenever you have $28,000 personal loans on each individual customer instead of a $200 personal loan on Cash App or something like this, it's a very different beast. So although we have higher CAC costs, we have much higher revenues from each client. So, right. and then let's go ahead.
Well, so like, I don't know. So what's the advantage of not marketing all of this, their app? I mean, the one argument is that like we want to make sure we have high quality members, but I mean, over the long run, people make more money as they get older. So I don't see like what's the negative side effect of getting lower quality members. Doesn't SoFi still want to get more direct deposit members?
Maybe it's just also it's a spend for those customers that maybe they just don't want to put towards their product.
Well, also not knowing that we're going to enter a tougher, like a tightening economic condition. Like when people are losing jobs left and right, when inflation's all-time high, consumer spending's all-time high, savings rate is all-time low. That's not the time you want to be adding low-quality members because
that depends. So it depends on what products they have access to. I would not say yes to a personal loan, but maybe access to a checking and savings or an invest account. I mean, there's definitely not a problem with that.
Sure.
But then also, what's the customer experience that you want to give a member? Do you want to just say, access denied to all of the, half the sections of our product before we can actually have access to them? Or do we want to actually branch out to those customers whenever we might actually have a riskier lending side of the business?
It's why you wouldn't let 12-year-olds on Tinder.
That's not why.
That's an interesting segue.
There would be no use case for them on Tinder. So 18 and up, right? It's like there's no use case for. Look, if you're poor, SoFi is not going to work for you. That's just how it is. I'm saying that as someone who is poor. Like that's just not going to. You could invest your little pennies into your stocks on SoFi, but that's it. That's all you can do. They're not going after you. They're going after the big guys. That's
yeah.
So.
What a good analogy that was.
I mean, your contributions top notch.
Yeah.
All right, Durbin. Go ahead, Riley. Go ahead.
Sorry. I mean, I actually wanted to ask you a question. So, like, you've been a SoFi member for what now? Like 2 months. Have you
3
noticed
Yep.
3 months now? Like, what have you noticed about the app? Because I actually think it's gone a lot better in 2022. At the very beginning of the year, before we had the bank charter, it was pretty bad. But SoFi Relay, like SoFi Invest, has gotten better. The speed has gotten better. It still has that weird like rolling, scrolling laggy thing, but for the most part, I think it's a way better product than what we had about 6 or 8 months ago.
I agree. It's nowhere near the level of Robinhood in terms of use.
Yeah.
That's just how I feel. But I mean, look, like there's just so much stuff here. Like whereas Robinhood, there's just one big number at the top, and then there's different, like, there's little nuances about it, but it's definitely better than September. And I still have Bank of America though. See, that's I have not fully transferred over onto SoFi. And honestly, it's just because I'm lazy, right? Like I haven't done that yet. Even though the savings on SoFi is 1,000 times better, right? Or the APY than Bank of America. So I just have to be able to do that. Bank of America have a business account as well, so it's a little bit complicated. Probably wouldn't be able to do business on SoFi. So yeah, eventually we'll
let SoFi earn you. I think that's smart.
Yeah.
So
go ahead.
Oh, I was just gonna say, so like you don't have direct deposit on SoFi.
I don't.
Okay.
You're not a Plus member? Why are you even on here?
Yeah.
Well, also, like I don't have an employer that direct deposits me anything, right? I guess YouTube.
Oh yeah.
Yeah, YouTube.
Yeah. The YouTube money is not that crazy, but I need to switch to SoFi. I just haven't done it yet. The investing thing is the real reason why I'm using it, though. At least for
Can I present my screen?
Yes.
Is this a first for Tevis?
Yeah, I'm kind of scared.
You gotta hide the tabs, man. Last time we were in a private
Can you guys see
conversation,
this?
I saw too much shit. Yeah.
Okay, you've been saying that. Who leaked information?
You did, Tanner, last night. What are you talking
about? Hey, Tevis, if you can hold Command Plus or just type Command Plus to make this thing bigger.
Sorry, hold on. I did it on the wrong screen. Yeah. So just as you were talking, Riley, it made me think of something. If you guys want to sort of
make it way bigger,
look at it's okay. There's nothing to read.
It says the same shit.
If you guys want to look at a metric that's a lot of people don't talk about, normally people just go to Google Trends. But one thing that I sort of look at as well, and Riley, I think you'll love this, is I look at the App Store for certain apps, and I go to version history, and I just look at the frequency that they're releasing new versions. So Jan 17th, Jan 9th, Jan 3rd, December 19th, 12th, 5th. And so it seems as though every week realistically, SoFi is releasing a new version of their app. Most of them have, bug fixes. Occasionally they might have, a new app update or something. But I guarantee you that if you go to the apps of some of the more traditional players, it won't look like this. It won't look like every week, because a lot of these traditional players, they don't work in an agile methodology. They work in more of a waterfall method. So they will maybe release every 2 weeks, every 3 weeks, every month, work on, bigger chunks or whatnot. But this frequency is probably why you guys are starting to see like the app be smoother every single time you use it, is because every single week there's a couple more bugs, a couple more improvements, a couple more things that get fixed. And so I guess just another thing to think about.
So real quick, I have noticed that SoFi does release weekly updates nonstop. And I know that, like you said, there are methods that developers have when doing app updates. And I know one method is to do like constant reiterative like updates on an app, even though that they might not be substantive. It is a good process to get your developers in constantly updating. So like you said, waterfall, is that an actual like terminology people use, developers use? So what is the waterfall and what's the other side of that?
Okay, so there's two schools of thought. One is very traditional, one is more modern, developed by Googles and the Facebooks. Waterfall is very legacy, and basically what it means is you're building out gigantic chunks of work. So let's say we were building out, I don't know, options trading. You would be writing all of the requirements. You would be making all of the designs. You would be building behind closed doors all the backend infrastructure, all the integrations, how the app actually looks, the UI, whatever, and you roll it out all together, everything after a year, let's say. Well, after a year, the market might have pivoted or changed or whatever, and then this is no longer the key thing. And so what happened was in the early 2010s, all of these popular tech companies, the FANGs essentially, they created Scrum or Agile methodologies where if you're rolling out, let's say, options trading again, what they're going to do is they're going to roll out a super bare bones version that looks like, crap, let's say, that doesn't have a lot of functionality to a small subset of people. They're going to track and monitor the usage. And then if they see that it's good, they're going to add some more stuff and then add some more stuff and then add some more stuff. And so what you get is over the course of the same year, you've now rolled this full feature out with added versions so that you have gathered feedback along the way. One of the best ways to explain it, and this is an analogy used across development very frequently. I've used this myself to sort of explain agile methodologies. If the goal is to get from point A to point B, waterfall is like building a car from scratch, whereas agile is like, I'm going to build you a skateboard first. It has 4 wheels and a platform. And then I'm going to give you a scooter. And then I'm going to give you a bike. And then I'm going to give you a moped. And then a motorcycle. And then a dune buggy. And then a car. You know what I'm saying? And so you still get from point A to point B, but you do it in the most frictionless way. And by doing that, you can roll it out fast. You can gather feedback. And you can iterate depending on where the market perceives your
and I assume for banks that's like really, really, really useful for fraud. Because
it's impossible for them to do though, because all of their infrastructure is so tangled together that they can't compartmentalize certain parts of their solution. And this is what's called a monolithic structure.
But for SoFi,
yeah, for SoFi, yeah, exactly.
It's good because like you can release a small update like options, and it's not fully rolled out for everybody that uses it, but you can make sure everything is working well while you update it slowly out to everybody else, and you can measure fraud and stuff.
Right.
Yeah, so
right.
Just to wrap that up, if you see weekly updates for this app, that to me, at least like working in software development, it shows that there's a good process, not only to shape the user behavior, because the user starts to expect like every Friday there's a new SoFi app version, but also it's a good internal process because they've gotten into the habit of consistently making small updates and consistently like tinkering, endlessly to perfect their app.
So
go for it.
I was just going to say, isn't this probably the same situation that caused SoFi's app to crash that one day where people, couldn't access their investment trading and everything just because they had rushed an update out?
No, it wasn't. Okay, so from the smart Reddit people that I've talked to, that was actually a big like infrastructural change. And I remember Tevis actually bringing this up on the live. The reason why the login screen switched and the whole for like 16 hours the app was kind of down for a lot of people was because they were doing some back end moving, which is good for like long term. But yeah, I think that's the reason. If y'all don't mind, do y'all mind if I share my screen and talk about that quarter possible partnership? Because it kind of ties into the app. Okay, so I know this. Okay, so there's this app.
Don't take too long though, because this is just your crazy whack theory, but go ahead.
No, okay. It's not.
Hey, I've heard of the quarter earnings app. I don't think they're big enough for SoFi to partner with.
No. So here's the cool thing. So, okay, I know the CEO of this app for quarter. And
when you know him, like you're boys with him? What do you mean by
please
you?
Explain.
Yeah, no, I actually have been talking to him for the past 6 months. He's really cool. I know some of his like developers and I have access to their beta version of the app on iOS. So I've been talking to them for quite some time. I'm a really big fan of their app. What they've done is they've built a really cool app where that you can listen to multiple earnings at the same time live. and also get the transcript a couple days after, which that's not cool. I mean, like that's not unique that everybody does that, but they have a search engine for people to like do some search across like all of the transcripts of all these companies. Anyway,
Riley, real quick, how do they plan to make money off of amalgamating public data for earnings calls?
Companies, it has a better user experience, and companies partner with them or not.
Well, so they're selling the API to be able to live stream these earnings calls. So Robinhood can theoretically, if you have Robinhood and you're owning a lot of these like companies, you can get like notifications inside your Robinhood app. Hey, you want to listen to the earnings call live? You go into the Robinhood app and then you go and listen to the companies that you own, and it automatically knows which companies you actually have stock in, and it can give you notifications to live. So basically, I put up on Twitter saying, hey, SoFi should partner with Quarter. The CEO messaged me like, who should I like talk to? And hopefully, I don't know, it'd be really cool to see SoFi actually have live earnings inside their app. And that would be like a really cool reward structure that SoFi could build out by like giving people SoFi points if they listen to like their company's earnings, and maybe have it like a social feature. It's something that no other brokerage actually offers, and it's a cool way to make people get their money right.
So
I don't get this at all. I don't think this is unique.
How
you don't think so?
Dude,
it's earnings calls. Like, what's so special about it?
It's funny, I mean, because like Quarter is like the idea of earnings calls, and you're like, I don't get it.
I've used this app. I would say they're the Spotify of earnings calls. Their app is actually really nice. The user interface, like Spotify.
A lot has changed though in the last like quarter for them.
No, but I'm just confused. Earnings calls are 4 times a year. Like, is the app only valuable to me 4 times a year? Like, why?
No, that's only for one company.
I'm not pitching you this app. I'm pitching that SoFi gets their APIs and then have it put into SoFi's app. So like whenever like let's say I own Amazon.
So you hold on. You want SoFi to pay these guys so that people can use the SoFi app to listen to other companies' earnings calls.
Live, yeah. Okay, so there's not in order for me to go and listen to Amazon's earnings call, I have to go and get the email, get the link, and then do the register, put my email in, and then I have to do that with a bunch of other companies. Let's say I have like 20 companies that I own and I really like, and I want to listen to all of them. I have to go and manually get the emails and register for all of these, and then like open up a web window. Quarter has made it to where you can listen to all of them live and just with a click of your thumb, just switch between them. At the same time, maybe there's 3 companies that you own that are live right at the same time. You can switch between them.
Here's the problem with Quarter, though. If we're staying on this topic, which is not about SoFi,
it is because there's a possible they're interested.
They could. That would be a cool idea if we got points for listening to the companies' earnings calls. I believe in that, but also it means nothing for the company. But what I think is like sort of weird about Quarter is that like it's a phone app, not a desktop service, and they give you the transcripts on your phone. Who listens to these things on your phone? Like I'm at my desk. You know what I mean? So whoever listens to an earnings call is out of their mind. Read the transcript. How do you ever hear any numbers or understand what they're talking about if you're not looking at the transcript? I'm aware that Quarter offers the transcripts and they offer it in a very cool way.
I disagree with you.
Guys, I think like we're going into the weeds.
I know. Let me just finish my thought because I'm pissed right now. Is that they don't let you copy and paste the transcript. What use is it to me if I can't put it into Notion? So I gave Quarter a try and I abandoned it very quickly. And you don't need to register your email to get on an earnings call. Whoever John.Smith at gmail.com is, I'm sorry, because I've sent you 1,000 registers and you don't need to go into that Gmail.
But it's still friction, and it would be cool for the SoFi app to have live earnings call. That's why I think it would be cool.
I listened to the Netflix earnings call yesterday on the way home from work on YouTube. I mean, like,
So let's just zoom out for 1 second on this Quarter stuff, guys. I think it's kind of cool when you think about being able to have a simplified way to listen and digest information on earnings calls in your brokerage app directly. Where I make my trades, I can also see the transcripts. Maybe they're simplified transcripts. Maybe I can see the earnings calls. Dude, like when I listen to Tesla earnings, I don't go to Tesla's website to listen. I go to Rob Maurer's page because he also like makes the notes. He has like an analysis after the fact. And so that's also like how I'm thinking about this, because SoFi is all about simplifying that experience for that investors, having it all in one. Well, now they're a brokerage platform. Let's just say you can buy and sell stock. You can through SoFi Invest. Why not have it so that it's simplified? Now, of course, there's a lot that goes into
more customer engagement.
There's two reasons. SoFi wants people to come into the app every day. There's a reason why they reward you.
Oh, they need to fix the fucking lag then. Then I'll come into the app.
But here's the thing though. Like if you can get people to constantly come back to SoFi to look, they can cross-sell you. That's the whole point. And
hold on, right. I gotta push back. Getting people to come to the app is a good thing every day, but getting me to come to fucking look at Amazon's earnings call for 20 minutes is not going to upsell me on a loan.
No. But like that's the thing. It's the one shot.
If the paying for the API is worth a lot of money, I'd rather spend that money on something else than paying for.
But hey, they're not going to spend money.
They're going to be on YouTube in 2 minutes after they're posted. Like,
okay, sure. I get that point. I don't want SoFi to be spending money on all these little like side projects either while we're not profitable. But if there is some sort of partnership where they both agree, hey, like, let's keep this cost real down. And then maybe in the long term, once we're profitable, we'll start paying you something. Sure. But like, I do think this is a good, like, option for SoFi members to constantly come back to SoFi. Cause like, if SoFi had all of this, like live earnings, like, hey, like come to SoFi, you could do earnings, you do invest, you do options, you do covered calls, you could do everything in this app. It's another sticky layer for you not to go somewhere else. Because SoFi has a differentiated product that broke, like even Robinhood doesn't even have this. You can't listen to earnings call inside Robinhood's app, which kind of, I don't know. What do you think? You don't think this would actually bring value to the whole experience?
You don't even make money off the investing part of the app. Like it's just
look, it's a cool feature for user engagement. It's not a thing that's going to like generate tons of revenue. Cool.
Yeah. Neither is buy now pay later, but they went strong into that because it's just
buy now pay later is a Galileo thing, right?
I don't think they went strong into it. I just think they released it.
I want SoFi spending zero time thinking about nickels, dimes, or quarters. I want them to think about fucking dollars, okay?
I promise you.
That's what every analyst said about Amazon in the early 2000s. And
Riley, do not make the Amazon comparison with this. That is the most cringiest comparison.
Tevis just left because you said that.
fucking comparison.
Okay.
I'm sorry for all the cursing.
All right,
we got to move on.
I'll stop pushing.
Look, it's a cool idea, Riley. We'll see if it happens. If it does, then you're right.
Yeah, it would be fun. I mean, yeah, sure. I think it would be really cool.
Is that what we're gonna?
That's all because you're boys with the CEO. That's why you're.
No, I
wish he just.
I just think it'd be.
That would have been so great.
A good idea. I really think it's a great partnership for SoFi.
Look, if I was boys with the CEO, I would be pitching my ass off too for them. But I'm not boys with the CEO, so.
Okay, I'm boys with the CEO because I like their product.
Okay. Durbin Amendment. Do you want to move to that? Or Tanner, you got something else?
No, I was just going to talk about some predictions.
Okay, let's do that. Let's do predictions.
Don't we have next video? When is?
Earnings will be next week. Yeah, because earnings will be next week.
We have one more video until earnings.
Yes, we do.
Okay, do you want to save big predictions till then?
That'll be next week.
All right.
I got the Durbin up. If you want to share my screen, we could talk about that.
Is it this
Bank of America and everybody's
No. I mean, you want to do that? That's the Wells Fargo controversy.
We can do that.
Okay, all right, let's do this.
Yeah,
I think it's Bank of America.
I'm also missing money over $1,300, and they're telling me to call customer service, and they keep hanging up on people. This another person here is also missing money, so we're trying to see what's going on. Money's missing today, and we need our money, and they're already telling us to call customer service, and customer service ain't doing nothing about it. So just a heads up, if anybody's experiencing this, please let us know, because this is not right. I'm missing $1,400 from my account, and they're telling me that there's no way they can help us. This guy's missing money too. This other person is missing money too. And you missing money too? There you go. So this is not something that's just one person. This is everybody's happening to them. And this is crazy. This is very crazy. Yes, Bank of America decided to take people's money without their consent. And we're asking what's going on, and they're giving us a runaround. Everybody for the same thing, man. Same thing.
All right. At least whenever SoFi has a glitch, we give people billions and trillions of dollars and we don't take money away. So
I'm sorry. Has Bank of America's CEO gone to Twitter to apologize to every single person complaining about the glitch? I haven't seen anything.
Yeah, and I think this was localized to like one bank branch. I'm pretty sure it could be, but that's the thing though. SoFi, this could happen to SoFi, but the controversy wouldn't be scaled up because everybody's behind their phone and we're not at a bank branch filming everything while the teller is punching buttons on a computer and not knowing what to do. So I don't know. I thought this was really funny though.
yeah, it definitely blew up like really, really big. I don't think it was too big of an issue. Like we even said in this episode, SoFi wasn't accessible for 16 hours. How's it any different?
It's so crazy though, because in the last 2 weeks alone, just the start of 2023, all of the big players have had something. Like Wells Fargo got a $3.7 billion fine. JP Morgan got sued for sued Frank for the $175 million, fraud account. Bank of America is having problems. Goldman Sachs is getting investigated for Marcus, had to lay off a bunch of people. Like every single one of these big pillars is just getting rocked.
I love how that, IP banking research, and I actually like the guy a lot more now. But how he came out and was talking about how, we couldn't even do what Marcus was doing, he used it as a comparable, and now it's being probed and everything like this. It's just, it's really funny. And that the Federal Reserve was just in our books, like, just 12 months ago.
Oh, for the crypto thing?
Yeah.
No, not just crypto, like getting our bank license. You know what I mean? So every single regulator was through our books and they went, oh, everything looks great. And then one little slip up by, Goldman. And bye.
One thing I think is funny about that video is I don't think I've ever seen a line at a brick and mortar bank branch in the last like 8 years. That was surprising. Everybody's actually going to the bank to get their paycheck. That's wild to me.
Yeah, well, that's that's where I think SoFi really does lack. And then we'll get into the Durbin thing. It's just like, I've been talking with a lot of blue collar workers and stuff like this that deal with a lot of cash, and they go, okay, well, I don't know what to do with this yet. And even though there isn't like we do have those systems in place, people just aren't used to going to an ATM to deposit. They want to go to a branch and hand it to a person and go, okay, this better show up in my account. And so that style of person, I mean, hopefully in the comments with people, I would love to know how many people get paid in cash and actually put it through like an ATM to actually go into your SoFi account. I'd love to know that.
All right. Durbin Amendment.
So the Durbin Amendment is interesting because SoFi is technically going to be making less money after this quarter, just because we're going to have more than $10 billion in assets. Or I don't know if it's this quarter. But basically what the Durbin Amendment is right after the financial crisis in 2008, the CFPB, which was established, the Consumer Financial Protection Bureau was established by, I don't know who, but just to like really probe into all the banking industry, all of the banks, to make sure that the consumer is protected. So one of the things that came out of that, the Dodd-Frank Act, was the Durbin Amendment. And that what it basically means is if you're a bank that has more than $10 billion in assets, the amount of money you can make on interchange fees that merchants pay banks for debit card transactions is going to be capped at like 22 cents and then 5 basis points percentage of I don't know, I can't remember the fee, but it's capped. So
they had an example, Riley. So I'll just read the example. What this means: if you pay $5,000 for an Airbnb with your Chase debit card, Chase gets $3 because they're essentially capped on how much the merchant pays them. However, if you pay that same Airbnb $5,000 with your Chime card, so since Chime doesn't have 10 billion, they're not capped. Chime gets $85. So
That's
$3
right.
versus $85 out of a $5,000 sort of transaction. That's what the
And-
merchant pays the institution, the bank. Go ahead.
And the unintended consequence that this amendment has had on fintech in the past like 15 years since this was established was that if you go to the Apple apps and the App Store and you go to all like the big interchange companies like Cash App, Venmo, and all these big fintechs, all of them are partnered banks with banks that have lower than 10 billion in assets because they'll be exempt from the Durbin Amendment. So what this means is that SoFi is never going to have an advantage against these like Venmos and Cash Apps because we're going to actually be the Durbin Amendment is not going to apply to us in the future. Which does go against my theory that I had a couple of SoFi weeklies ago that we would be the partner bank for a lot of fintechs in the future because we'll have like a really good tech platform. A lot of companies that are in that will make money off of interchange fees from merchants aren't going to partner for SoFi because of that. But other than that, we only make 4 million in revenue just from interchange fees, so it's not going to really change like how much money we make on a quarterly basis. But it is something to be aware of because it will change the way that we partner with people in the future. I don't know. What are y'all's thoughts?
I don't know. It makes up a tiny portion of our revenue. I don't think it's going to make any impact going forward.
So can we just dig into the fact that because from a revenue perspective, it's almost negligible. The 4 million in interchange. Can we dig into how it changes our partner mix?
Yeah. So our partner mix. So there are going to be a specific subsect of like fintechs that won't really be incentivized to partner with us because we're going like if Cash App and Venmo and all these these types of fintechs started this year, they wouldn't necessarily pick SoFi because SoFi would not be exempt from this Durbin Amendment and they wouldn't make a whole lot of money. So what type of fintechs are we going to be partnering with in the future? It's going to be banking infrastructure, in my opinion. And I don't know. I think we're going to be giving a lot of people are going to come for us for our tech, but they're not going to be coming to SoFi to like partner up against the bank, So
this is going to affect Galileo's interchange fees.
Yes, but I don't know how. All I know is that Anthony Noto in his recent conference call that you have up on your channel, Tannor, did mention that it does affect Galileo. I don't know which way. I'm sure they're going to have some other partner bank to sell.
So hold on. Let me just double tap on that, right? Because let me see if I'm understanding this correctly. Now that SoFi has over 10 billion in assets, merchants that are partnering with SoFi pay SoFi less. Wouldn't they be more incentivized today than 3 years ago to partner with SoFi?
No. So this is only debit card interchange fees, which weirdly enough is how Americans like to pay. There's more debit card interchange. Like there's more debit card transactions than credit cards. I don't know if that's correct, but I know that there is a huge subset of Americans that use debit cards, and it's higher than you think. But so merchants used to pay banks a ton of money before 2008 for debit card interchange fees. And then right after this whole Durbin Amendment and the Dodd-Frank Act, banks had to figure out like how to make money and take a lot of their because a lot of the revenue just collapsed. And so a lot of what they did was these really horrible overdraft fee.
Sorry, what revenue collapse?
There was banks used to make a ton of money off of debit card interchange fees before 2008, and then after that they didn't. So there was a lot of banks that went the overdraft fee route, and there's a lot of interesting, like they used to have this reorder. I'm not going to get into that because I don't know too much about it. Maybe another time. But
when you mean debit card fees, you mean like if I pay at a corner store with my debit card, that fee is what the bank's. Okay.
The bank makes money off of the interchange fee because the bank issued the card. So before this act, the banks were making a ton of money. Now they're not. There's only a cap. Like what Tevis said, Chase can only make $3. Chime can make like 85 off of like a $5,000 stay. Right. And that's why a lot of these fintechs are just like raking in the cash because they're partnered with these really exempt Durbin Amendment exempt banks where SoFi doesn't qualify for that anymore. So it is going to change the type of partners that we're going to have in the future. I'm not smart enough to know like how that actually is going to affect us because the whole fintech landscape is so like crazy, like there's going to be a ton of different types of fintechs that are going to partner with SoFi that aren't going to really care about this Durbin Amendment. Like well, I don't know.
So yeah, I don't know too much about this, so I don't want to speak on it too much, but have you guys been following any of the latest bank earnings reports at all recently, especially Ally that came out today or yesterday? Ally had a great earnings report. And funny enough, as most of the banks had been increasing their provisions for credit losses, which means, they're really worried about their loan performance actually seeing higher defaults and people not paying. Ally did raise their credit provision losses, but not nearly as much as any of the big banks. Now, if you guys haven't seen it, it'll be hard to speak on this, but I was just wondering if you guys think that this is a, an Ally specific thing or a digital banking specific thing that's happening. And then also, have you guys seen any of the trends across these big banks and what they've been doing either with, new checking account setups, customer spending through credit cards, personal loan growth, deposit declines, anything along these lines?
I thought the Ally was going to have a way more negative quarter.
I think a lot of people did. A lot of people did because I think if I remember correctly, let me just double check the stock today. Like it shot up, right?
I saw some 20%. People really made a lot of money on it, cleaned up.
Ally Bank, that's crazy. Like up 20% in a day. Like talk about a huge mismanagement in how they, how they were expecting that quarter to come out. And that's similar to what we've seen every quarter from SoFi, right? Like across the board, if you look at every quarter that SoFi's put out since like Q4 of 2020, we've had beats like across the board, except for one quarter where we were in line with expectations. It happened
Tannor,
every
what
quarter.
was the reason again for why Ally is up 20%? What metric did they beat on really well?
So I think the biggest metric that I could find is that they were just not revisioning for credit losses, which means they get to keep a lot of their earnings at the end of the day if what they say is going to be amazing. And they also just saw, like, because they're a great bank, they saw, great returns on tangible assets and just, across the board, good growth, good returns, like what SoFi is going to see, huge growth in lending. And that really is the big driver. So
I actually read a really great thread on provisions for credit losses in general, but it was pointing in the other direction of going negative. Yeah. So maybe we can jump into this thread a minute. So I can just go ahead and read. Bank of America just posted 1.1 billion provision for credit losses. This thread was back on Jan 13th. JP Morgan's was 2.3 billion. This is a very bad sign. In the next tweet, she goes on to say that banks reported good earnings and JP Morgan blew out expectations on their EPS. Bank of America posted great revenue numbers thanks to higher interest rates, but both banks declined after the results were released due to provisions for credit losses. JP Morgan's 2.3 billion quarterly provision for credit losses is the largest we've seen since 2020. And in 2019, the provision for the entire year was 5.5, and 2.3 is just for this quarter. What does this mean? JP Morgan and Bank of America expect a lot more defaults in their credit portfolios in the coming months. Each quarter, banks increase or decrease their loss provision based on their future expectations of losses from their current credit portfolios. A large addition in one quarter means that the expectation for credit defaults is higher than it was 3 months earlier. It's one of the best forward-looking indicators on banks' income statements. While most information on the income statement just tells us about past performance, the credit loss provision gives us a glimpse into what the banks expect in the near future. So I'll just wrap up there, but basically saying that JP Morgan and Bank of America expect a rough time coming from their credit loss provisions.
And that's similar with Wells Fargo and Citigroup and all of these. I just think that the reason why I brought up Ally is because they are not really showing. I mean, they are showing an increase, but it's not nearly what these big guys are showing.
Mm-hmm.
Do you think that this is a good positive sign for SoFi in their quarterly earnings? I know we're kind of skeptic. We don't want to make assumptions, but Ally is more similar to us than they are to the old traditional banks.
So what I think it's interesting, I don't know if it's necessarily a good sign, but it adds a little bit of uncertainty of how bad it really is going to be. And so, you know what? It was terrible, 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 and then not so bad. So who knows if that
is an interesting comment too. It's a Warren Buffett stock. I mean,
if
that's
it
probably
is
not the reason it's up, but
yeah,
there
that's
is
not a good reason at all. All his banks are down.
yeah,
if there is a clear distinction between like neobanks and traditional banks and how we manage this whole like this recession, do you think there will be like a weird, like a big allocation of money leaving from traditional banks, like investors leaving to neobanks? Because if we outperform all of the traditional banks on quarterly earnings, maybe we could see SoFi's valuation go up.
I don't even think we will. Like, this is what I said with IP banking research. I just don't even think like we should be competing with them. You know what I mean? I think our position right now is to grow. Like let's get a bigger customer base. Like what all the metrics that they're trying to go after, like return on equity, is just showing how much they can grow based on what they already have. We don't have anything right now. You know what I mean? So let's not even worry about that. Let's grow our customer base, our lending profile. And then, once we start getting into the Ally size where, growth actually starts to slow down in some sorts of ways where, your actual target audience either knows about you and has not decided to go with you. That's sort of where whenever we get to that size, then we could start acting in those banking metrics. But I mean, for the most part, we're still growing out our products. Like we're still releasing new products.
Either way, I think this quarter that's coming up, this report on Jan 30th would be a really good indicator for what's going to come up for the upcoming year, 2023. I mean, from a guidance perspective, sure, but also just to hear management on the earnings call, what they're seeing ahead, whether we are closer to like where we are on that spectrum of banks, because I feel like there's a wide variance as well, depending on what they're doing, what they're seeing now in the tightening economic conditions.
Chris said, is SoFi doing any layoffs? No, actually. Anthony Noto even tweeted and he said, we are hiring.
Yeah, they're hiring.
Yeah.
Lending Club did layoffs and a whole bunch of others, but SoFi's hiring.
So you can look at that two ways. One, which I think is a little bit hard, is that we're just so unbelievably proficient that, or efficient, that we're able to, grow and, get away from our actual losses and just perform 100% on every metric. The market is definitely not pricing that in. Another way that you could phrase it is that there might be just a sheer amount of optimism, maybe even to a bad point, right? Where we're actually might be getting ourselves into a sticky situation because we have a CEO who is gung-ho on the idea that we're not going to see a lot of losses.
But so I think, yeah, of course, it's either a good sign or SoFi is just tone deaf to the macro conditions.
Right.
And I think the point against that is earlier in this pod, we were talking about like them also cutting some of the budgets for marketing and other expenditures, just being more efficient with their expenses in general. So I think, it leans more into the direction that they're not tone deaf. They're actually being strategic about where they allocate capital.
Ironically, they're hiring a new a tech team for credit cards. That's something that we talked to, I think last week or something. But yeah, so they're trying to build tech for credit cards while everybody's like scared of allies in the traditional banks. Credit.
It was funny. I was just on their page today, actually, on their credit card page, and they had this fly swatter or whatever saying, like, you know, if you ever see any cards with annual fees, say no to it, and it's, you know, smacking the fees away or whatever. So I'm like, how can you have these sort of promotional events and then ever want to give away a premium card? You know what I mean? Like, get that off, and let's like, I think we should actually be putting up some really high end cards. I think that would attract an audience that we really want, you know. But put out a $500 you know, a year card and compete with the Chase Reserve and have a, you know, a cheaper fee than them, but offer the same rewards. It would at least attract people there, and then also bring them in for other products.
For sure that's going to have to happen, right? Like, because I mean, the only thing stopping us is that our back end tech core, we're paying somebody else for our credit card offerings. So these hirings of new credit card people should hopefully we're building that stuff ourselves now, and then maybe by the end of 2023 we could start seeing something. Other than that, like there's no doubt in my mind that SoFi is going to start offering some like crazy credit card stuff.
This person in the chat just said they signed up for a SoFi credit card and it's been 3 weeks and they have not seen a card yet. Let's hope that's because of high demand. Let's hope.
I mean, that's not even that bad. Tannor signed up for Twitter Blue and it's been 3 weeks for him to get a check mark. So
okay, so first off, I got it after my 4th week, but I am verified now, so you can't talk to me right now. I don't even know why I'm in this call with you. You're the only one without a blue check mark.
I'm the only pleb left, yeah.
I don't even know if I'm talking to the right person on Twitter. So I have $11.
It'd be funny if he never gets a fucking blue check mark.
Yeah.
Wait, Tevis, did you sign up for it or no?
No. Fuck that. When they roll out the video function that I can like post videos and they're like starting to compete with YouTube, then I'll do it. But until then, I'll let them like iron out the kinks, you know, and then sign up maybe in the summer or something.
Chris, I agree with you. Amex is the best credit card platform alive. But anyway.
So I don't think we have any other topics left. So maybe we show Riley's video.
I don't want to show the whole thing because, okay, so this is Anthony Noto's leadership.
Oh, God.
Hold on, no, here. I don't want to show. Okay, so we all don't want to be biased. We don't want to be biased. This is
give us some insight on.
Yeah, we don't want to be biased. This is a sizzle reel on this.
I just wanted to see the football. Noto plays football in this, and I thought it would be really cool to see.
Noto is how he went from Goldman Sachs banker now to Twitter CFO. So Anthony Noto is one of those people who, if you asked him 10 years ago what you plan on doing, and he said, "I plan on being CFO of the NFL. I plan on being an IPO banker at Goldman Sachs." And oh yeah, I plan on being a CFO of Twitter, people would have looked at him and laughed. But he is one of those people who's able to do these things.
Intercepted by Anthony Noto. Anthony Noto's been such a competitor. He's been such an important cog in his defensive unit. Had his knee operated on several times. Will have surgery again after the season. He's a former fullback. Reads this one, picks it off. Fumbles. Recovered by Army. Here's a pretty good lick by Noto, big number 44. Let's present this week's Toyota Leadership Award. Anthony Noto from Army.
Sports was revealed.
That is cool to see a CEO sack some quarterback.
All right, I got to do a little bit of self-promotion, guys. In this...
Oh, fuck, here we go again.
Can I have an episode? Like, I can't have it. I've got this long.
Go for it.
I'm 9 subscribers away from 7,000. I would love if we could reach 7,000 during this pod.
Bro, let me pull up your channel.
Also, since we bring that up, I'm 6 Twitter followers away from 1,000. So
no, like, one at a time. You should have spoke sooner.
All right, we got it. We got 144 people here. We got to get Tannor to 7K right now. Tannor,
while we're at it, I'm like 10 away from 1,800. So
okay, Tannor, this is my other account, so now we're 6 away because I got you on a sub. So
boom, there we go.
So
There we go.
boom.
I guess you can't see the actual number, but I'll.
They should refresh soon. We should get to 7.
People
Get the
unsubscribe from
let's just roast his thumbnails while he's doing this. So we
All right,
have
so I've started experimenting with no border. Okay, seems like no one likes the border.
look at this one. This is a good one. SoFi 10x.
Wait. Go down. Bottom right. Right there. My favorite. I love
What's up, guys? I mean, I'm just out here trying to do new things. Dude, the farther you go down, it's gonna get so bad. Scroll back up. Why has no one watched my Tesla video, huh? You don't like Tesla?
Okay, did we get to 7,000?
Guys, it's getting bad, man.
Why are we at 7,000 yet? Come on, guys. We gotta get
People are just unsubscribing as they're seeing these thumbnails.
Yeah.
All right, if we can't get you to 7K,
Not a single person. All right.
get Tevis to it. Oh,
Is that it? Is that the pod for this week?
no, I'm sharing your Twitter real quick.
guys,
I can always find something to talk about, guys.
I seriously believe that this company is going to be like really.
They
big
just
in
haven't
5 years.
presented anything new since, their earnings. It'll be a flood of new numbers. Are we doing a live on the earnings? Should I do it or not?
No, we should do it.
Yeah,
What-
I'll be
so
there with him.
When's the call? Is the call at 8 or
It's in the morning.
7 or 8.
Yeah.
Noto's going to be like it's going to be like 4 a.m. for Noto, like when he does the earnings. Is that right? For him in like California, like that.
Wait, he lives in Cali?
Well, that's the headquarters, or San Francisco, right?
Oh, right. Okay, so yes,
like he has to get up really early to do this earnings. It's gonna be crazy.
Who wants to answer Chris's question? I'm not gonna read it, but
What?
it's a question that I'm not gonna read. It is a question.
Why do you even put that up?
Dude, it's definitely
We're
right.
asking for answers.
Dude,
That was gonna be my
who are
answer.
you guys?
I was like, who's the one that's putting up videos of him?
Yeah.
Everybody's trying to be like have
Who
this
in our
journal full-
private chat. I'm gonna expose Riley here, where he goes, let's show Noto's accolades, and everyone goes across the board, no.
It's news. The guy gets
and then the
accolades.
next
You
week,
guys-
Riley goes, okay, I agree with you guys. Next week, but
I
look at him
do-
catch a football, though. Come on, let's watch him catch a football.
This is news about the CEO. We can be unbiased and still show the news, right?
It's literally a video from like the
I posted bad
1990s. It's
stuff
the
about
opposite of
Twitter.
news.
Throwable
They're-
response. Riley twice, not even once, just twice.
Well,
guys
look,
are
Riley
having fun.
Riley loves Noto. That's the good that we all love Noto. Riley just loves
my
Noto.
If bad stuff happens to Noto, or if Noto messes up, I'm going to be the first one to say it too. But-
You know who I did a podcast with today at 1 p.m. I did a podcast with a CEO of a public company in the UK. His name is Richard Barlow, CEO of Wejo. And what he was saying on that podcast was that they need as much exposure as possible, and they're willing to do even my shitty podcast, right? So that's basically what he said. So Anthony Noto, there's no reason he should not be on the stream. Like, I feel like CEOs should recognize how much retail helps.
Admit. First of all, you throw comments like that up on the screen. And second of all, you refer to him as Yo on Twitter. He's never coming on this fucking pod.
Bro, he's the guy. I don't think he wants to be called Mr. Noto. You think he like? I think
You're like, yo, Tony, come on the podcast.
This is why Chris Hager is the guy that gets the CFO, to do an interview, because the guy's like,
no, because Chris knows the right
he's
questions to ask. If Noto was on the pod, I would not ask him about fucking SoFi stock.
He would never do it though. He's not going to trust his billion-dollar company in the hands of somebody like us that could say one wrong question. And he's responsible.
I'm exempting myself from this question. I will absolutely do an interview with Noto, and I'll be so professional.
Riley's just going to ask him personal questions, like.
Well, you can't ask him like, hey, like, I don't know, like you can't just ask him any other question like about the company.
Yeah, you can, man, about the company. Well, the thing is,
you
it would
can ask
probably
about-
have to be pre-recorded, not live.
Mm,
Yeah, they're probably not gonna let us do it live because they got to clear it through. Like that podcast.
investor relations, yeah.
Yeah.
Who would worry about that though? If we, actually posted a video, didn't do a live, and Anthony Noto is on it. Like, people can wait a week.
Oh no, 100%. 100%. But yeah, I mean, maybe
Tannor and Chris
work.
only. Look at this.
What the fuck?
If it was pre-recorded and we got SoFi Investor Relations on and we did it like, yeah, dude, that could actually work. But if it's live, there's no way. There's no way.
And you know what? I got to call out one of these users. So bring up his thing. B-Dubs, this is the same guy that in Amit's channel, okay, whenever he shaved his face, said, "You almost look as young as Tannor." Like, this guy's older than me by like 2 days or something. Like,
Who, me?
yeah, I'm the 17th. How old are you?
I'm 27th. Okay, so
hey.
Yeah.
It's just I don't have it here, all right? But I'm
Yo, Mitt
whatever.
looks like 10 years older than you, bro, not 10 days.
You think he looks 10 years older than me?
Well, maybe not now, but definitely with that beard.
All right. Well, then
someone called me 44 the other day. I was like, what the fuck? Like,
That's all right, man. You're a founder.
Dude, we should all get up one day and like do this all in like person and drink and have like a SoFi live one day. If this stock's 10x, we got to do something live, like in person.
guys,
true.
Or we could all just stay in our rooms like we do every Friday.
Yeah.
I have to fly down, but yeah, sure.
Yeah,
all
y'all
right.
come to America where it's fun.
It's
I'm
time
going to
talk about
America in
talent.
March. All right.
You're coming in March?
Yeah.
Where?
Florida. That's where all the Canadians go.
Yeah, after
Isn't
like
it?
65.
Yeah. Well, I mean,
Wait, what are you gonna do? What are you gonna do in Florida?
go see family.
Oh, you have family in America. Oh.
Yeah.
Wait, where are you guys? So Riley, you're
North Texas.
you're in Texas, and Amit,
I'm in Jersey.
Jersey. Cool. All right.
We should all just go to Vegas. It's the cheapest plane ticket for everybody.
I'm down. I'm down to go to Vegas whenever.
Bro, I hated Vegas when I went, bro. I did not enjoy Vegas. I'd rather you guys come to New York.
Well, who'd you go with? Because you got to go with
No, I mean,
the
I
right
went with-
people.
yeah, I just didn't like the vibe of Vegas. It's just like a bunch of old people smoking and getting drunk and playing roulette.
Yeah.
Like it wasn't interesting.
I have to go there for a conference just so I can get.
You have to go there.
No, it's true. Okay, so in Canada, if you're a financial advisor, you need to get these thing called CE credits. It's bullshit. It just means continued education. But if you go to this Vegas conference, you literally get all of them for the year. So that's
Vegas conference, bro. What the fuck did you just say?
Vegas.
Vegas conference.
Whatever, guys. I'm
It's not
saying
sexual, bro. Vegas.
Vegas.
See, this is the shit we're gonna say if Anthony Noto's on. He's just gonna be looking at us like, "What the fuck?"
I'm a Canadian. Like, what? He's gonna make fun of my accent?
Yeah, probably.
It's a boot time.
All right, we got to scuttlebutt out of here. I got to talk about talent here.
Scuttlebutt out of here.
Good night, everybody.
All right. Bye, guys.
See you, buddy.
We'll see you next week. Bye, guys.
See you. Bye.